Okay, uh, let's put the focus back straight into moving forward. Trading is always an extreme challenge mentally, psychologically, emotionally. Emotional means mental, psychological means the recent past trades need to make money, need to recover from what lost, and need trying to make a lot quickly is always going to destroy. I mean, it's always going to destroy trading results. That's it. Fact, trade always there's setups, and you take shots. You get out, you take 2 hour shots, you get out, whatever it takes, whatever it does, manage it. Hindsight, they're always going to be trades that we missed. Any negative emotion attached, any emotion attached to trading is going to not make you any result. The setups, they work, and they're there to either get you into trade or get you out of the trade. Okay. Uh, what happened? Just a quick overview. But eventually, it's about your state of mind, risk management, and leaving it alone, and that work it out. Work it out. So this is the anatomy of a pound yen trade. Many opportunities were available, and many opportunities to swing trader to shake out. You can be just in the short-term trades. I can be in a long-term trades. Either way, I have two accounts, one for long-term, one for short-term. This chart, this trade shows this is anatomy. Extreme monthly pivots, monthly S2, whatever. It just start to make a reversal pattern. Just look at this. Okay, the most important thing is not the pivots. What happened? What happened on daily? Let's just look at it. Last 2 weeks, there were opportunities all everywhere. Look at this. Look at this 4-hour chart. Okay. Right here. When this happened, okay. Tech area. Breakout. Line. Gotta take it. Pull back this, gotta take it. This was, no, just what happened here. The reason I'm looking at this as a staying remain bullish bias is because this came up from extreme weekly pivots, support zone, and weekly and daily, as we can see. But look at the patterns. Recognized, saw span, saw this, W, this W, there was a weekly pivot underneath. If it matters a lot, but this W is good enough. Taking the pullback, leaving it alone. Where did it go? It went to previous high and stopped. First. came down. This trend line picked it up. So I really want to show this in video that lots of time this sitting here, it looked like sitting here, it looked like a reversal from the previous size and bow and arrow. I mean, the only thing is not to go crazy about taking a long-term trades because of that. Because you're supposed to go like this and see where it stopped. Stop. Right there. One-hour chart. You were following this, shorted, stopped out, shorted, should have got out here. But when you saw it going back up, that's it. Supposed to take this double bottom, leave your stop here, and let it go. Or you could have waited for this and then go on a 5-minute chart and just keep taking these blackjacks. But what matters here is like when this showed up, what matters is the context, really. The context is, what matters is really the context. Context is, you had a pivots here, you had a head and shoulder. You had the breakouts. You had this. You had these breakouts. So it's bullish. Okay. Supporting right here. There was pivots, extreme pivots bouncing off. Everything showed bullish. Just this shakeout right here from boom, 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 without having lines, this just looked like it's gonna come could come, but no. You could just wait and see which way. Okay, just read bar by bar after that. Okay. All right. Read by bar. If this thing is breaking, if this thing obeying the trend line or no. This thing obeying the trend line, and then after this is broken. First of all, if you have a support, you have the support for our trend line, and then you have the double bottom on 5-minute, and you have a breakout of double bottom. Okay, this double bottoms breakout, then you have the blackjack, then you have another blackjack, and then it's already broken out of this, but maybe like, yeah, role reversal. Even if it's a little bit higher, it's okay. So that's the kind of trade that comes often, several times a week. Where things were not good is this. When we were looking at the 4-hour chart, and it really looked to go from here, when it went up, I was a little bit in it. I missed that earlier. So every time I miss a trade, I go into revenge trading. Okay, that's automatic emotion without, instead of reading bar by bar, bar by 4 hour bars and 1 hour bars, I'm going and then narrowing down to 15 minute, 30 minute, 5 minute, reading bar by bar. Okay. And I'm gonna look at 1 hour chart here because it was the area that I got problem. Okay, seeing what I'm seeing right here, everything about it says is gonna continue from moving averages somewhere bullish. So it did. You know, it came down here, boom. After seeing this candle right here, the last candle, my brain, auto brain took over and said, that's it. It's just going to the moon. It's just gonna shoot to the moon. So on a shorter time frame, I kept getting in. Okay, this is then I go to 15-minute chart, and when I see this on a 15-minute chart, I kept getting in, seeing this area as cannot be broken now. I mean, it's a point of no return kind of trade. Okay. Forgot to be careful around this previous highs. Whatever the reason, the shakeout, whatever the reason it bounced out, that's what price does, whether it's intentionally, unintentional shakeout. So on 5-minute chart, I was right here and I was bullish, adding a lot for go up. That's why it's very difficult to trade 5 minutes, not to expect to get stopped out and not to like just leave it alone or do the other way. So this was it. Wait, did I get in the right area? Yeah, here. Yeah, this is it. I saw that, and I was already made enough money there when I saw that. Okay, this is what I saw. So I had the buy order picked up, and I saw this and I'm in and I'm making some money. All of a sudden, seeing a pin bar at this resistance did not really got me cautious, and instead of reading bar by bar trading, when trading 5-minute chart, you gotta get out. You gotta you gotta put the stop loss. Like my stop loss should be like right here, okay, which is a lot. It's still a lot if I'm buying, but it's not a lot. It's 20 pip stop, perfect. My stop, I should not be in this trade after this, but here's what happened. This is a good buy, okay, because price so strongly trending and context is very bullish. But then my stop should either be behind this recent candle or this engulfing or this previous. Okay, so what happened here? Didn't want to go up, turn around, should have taken the stop. I was waiting to take out the pin bar, didn't take out the pin bar, so no matter what, I should have just got out. No matter if I'm up, down, whatever, break even, down, whatever. Sideways. I'm seeing sideways. I'm seeing it's breaking, it's going up, pattern breakout, going consolidation breakout, triangle breakout. And when I see this breakout, I'm not getting out. Why? Because of emotional, desperate reason. Survival mind. Just want to make a few dollars right now. Quick, fast, quick $100. That's what satisfies me. And that's where everything must change. Everything must be reset, broken and reset. where I need to either get back up, either based on a next signal of a swing up, a new up fractal, no, but counter trend line. And this is where if I didn't really quickly close it, it would have been a huge, I would have probably closed it right. I would have been sitting in the same trade for a long time. No matter what, this is the way to deal with this. Intraday trades, have a separate account for intraday and long term if you can. If not, just do the intraday trades, do the day-to-day trades, okay? Or at least cut the long term, take advantage of this short term, okay? You have the triangle breakout. Forget about the moving averages at this time. Forget about everything. Forget about price and could bounce here, here, here. Don't leave that alone. No matter what anybody else said, you said to yourself, self-justification fallacy. Dumb play. Here it is. You have a sell signal. You could take this. Your stop is always at the previous. This is fractal. You knew there was a trend line at the bottom, right? Okay. Look at the pivots. Look at the trend line. It's just for additional, information. It's not gonna give you the perfect everything. Okay, just put this here and see what happened. Just connect at least this to this and the rest wherever it goes. So you got that. You don't need that. You got that. Another zone where you could sell, and this is a sell you took, but why put the stop here? You don't think in this Asia and London they're gonna break down? We did that. At least put the stop here. Yeah, it's a big stop. Yeah, that's where it's supposed to go. Okay. Or stay out of this trade at that time at midnight. Saw this, took this, good, got out, good. Now, you could go on a 15-minute chart and see, do you get anything good here? You got double bottom, break, 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 break. You could take this, you could take this, you could take this, only based on engulfing and a stop behind. If you don't put a stop and you keep looking at price bounce back and forth, take you out, get back up, get back in. But don't, surgical trading doesn't allow you to add here, and then boom, it could drop. It could just drop from here to here. No. Surgical trading is, you have this, okay? You have this. Let me just do. You have this, you're in. You have this, you're in. You have this, you're in. First, you have to have this right here, this candle, right here, this candle. Stop right behind the candle. Not behind, but yeah, behind the low, behind this low. Yeah, this, stop, 10 pips, let it go. Get out at 1.5 hour, 2 hour, whatever. 1.5 hour after the spread. Look at this. Now, don't worry about everything else. Just read bar by bar. Just read bar by bar. Whatever could happen, break it down 30-minute chart. Okay, let's just do this. Let's look at this. First, you whatever was that you hear, got in and get in, you know, saucepan. This was a sell here too because of the 4 hour support. For our zone. Double top. Boom, 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 boom. Hmm. Hmm. See? This. Double top. Double W. A W at the support and a pivot. If you want to take this, take that. Follow the price action. Higher low. Higher high. In. In. Missing all this out puts you on a tilt. Means you're not thinking straight. You're not following the process. Taking profit here, nothing wrong with that. You know, this is a previous, it's a 1 hour. You know, this is a previous high. Okay, profit there, nothing wrong with that. Price pull back, getting back and taking profit here, nothing wrong with that. Taking a couple of stops or break even, nothing wrong with that. After you see price drop, trade the short term or trade this. Wait. Boom, boom, boom. Price giving you all the setups. You can know the context. Right now, in this context, since it came from this zone, you know, monthly M1, it can go to monthly M3. Yeah, but is it guarantee? No. How do you trade that? Weekly M2 to weekly M4. Well, yesterday you thought it's gonna hit, that's why you were buying, looking at this. Be very careful. You can come 10 pips close and then turn around and do anything. Okay, the price, the blind spots in the trading is I'm sitting here and I think price must reach, you know, this target, you know, somewhere. That's the blind spots in my trading, the leaks. I think price got to go and hit the blue line. That's where I'm getting really killed a lot. Yeah, there are times where I'm gonna double in convictions and assumptions. I mean, yes, shakeouts, you can trust, okay, it's just a shakeout and give it, have resolve to give it a couple days while sitting in minus 1%. It's mentally very difficult, but you know, you don't have to do that. Trade intraday. If you really want to have in the future have a separate account just for swing trade, your stop is behind this weekly pivot, and you letting it shake you out. It comes back. Price is always gonna whether it's slow like this. So impulse move, corrective move. Corrective move can be very slow and complicated like this. And then boom, impulse move, and then corrective move. This corrective move it looked like a reversal here. Okay, so you are almost assuming this is gonna reverse all the way back, and you're thinking to keep selling and put a stop here, or take this as a failure point. No, these kind of bow and arrow entry, whatever is a context, in 4 hour you could work with 15-minute, 5-minute blackjacks or 15, 30-minute pullback, but you can't. There's no guarantee. It looks like, yeah, this is it. This is the big, huge reversal clue, a reversal setup, printed reversal clue, and then you can't assume that. Especially you have a trend line, especially in price bouncing up, pivot structure, pivot structure, pivot structure, trend line is a pivot structure. You can't assume anything. Surgical trading for intraday gains means you have to get in early, like this was right here, break of this triangle. Okay, you have to get in early and get out somewhere where you don't want to waste too much time. You don't want to be like expecting it to go all the way here. Get out the previous highs, even this high. Okay, if you missed going from here to here, you missed. If you want to leave another 5 minute, it looks like a 5 minute chart is going to go up, was come back and you get out and break even or in a few pips stop, that's fine. You can't be so focused on P&L or just making money or have to have money. No, you must trade the process the only way. Your mind needs to get back. Need a lot of huge breakthrough. I remember mind has to come back. So what happened here? As we can see, have I been just playing the lines, the averages, the pivots? The lines alone will give you all the reasons to get in and get out. Bounce off line, get in. Break out a triangle, get in. Previous highs here, get out. Pull back to somewhere, I don't know, whatever it's gonna do. Okay, obviously I'm looking for a pullback to roll reversal. Pull back to this zone, and it did. Okay, right here. Okay, clear all this up. Anyway, pull back to this. Even without pivots, I could have just traded the lines. Pivot is just an additional clue. And without lines, I don't want to just take them all the time unless they have a really good structure here, like this one. But this one also, had you had this line drawn, this right here, let me change this to colored so I can clear this up. If you had this line drawn like this, and it matches with the weekly pivot, and it matches with the, and then you get a double bottom at this here, a complex W, across the W, you gotta spot these, and you did. Look at this. All you have to do is to imagine this, any shape or form. Close your eyes, just imagine a W happening, any shape or form, and there's many happen here and there. Any shape or form just happened in the 5-minute chart today. Look at this. So there's, anyway, 1 hour W, pull back, line, boom. Maybe wait for, maybe put a pending order to break up this trend line here. Okay. trend line, put a pending order. If you can't stay, put a stop loss behind here. Okay, 50, fine, let it go. All right, break up this triangle. Where do you put the take profit? Previous 4-hour high, right there, right there. Price come down next day. You know there is a previous low here. You put a pending order to buy, put a take profit around this area again. Okay, after this, either you really want to take shots at, chasing a bit too high to buy, to expect, problem is you expect a tsunami moves every time, and it's only happened very rarely, so stop expecting price to go big huge in your favor every time. Must go in your big huge. Okay, you expecting here to price to just go to the moon, and it's wrong. Trade very surgically with 5-minute blackjacks and keep taking stops, getting out. Because if you had done all these line based and pattern breakout based trading, you would have been in already so much profit that you didn't have to worry about stressing over 5-minute blackjack. This is gonna repeat for rest of your life. It's gonna repeat in everywhere rest of your life. You can look at all different currency pairs, any instrument, tradable instrument is gonna repeat. Lines, patterns, breakouts, continuations, role reversal, blackjacks, where to take profit, previous high low. Okay, just look at some pivots. Fine, it's not going to reach the pivots that you want. It didn't reach this pivot. No problem. Whatever reason it went sideways and turned around, I don't care. If it was wanted to sell this here, fine, at the break of this triangle and pull back. Want to sell here, can just put a tight stop, fine. If not, put a stop at least, because they're going to be stop hunting here. Or look, or just get, if you got stop out here the 0.5%, just get back in and take this, and you have you have it. Get out. Look for a reason to go long or short based on this trend line. Getting a double bottom here, high low, blackjack, whatever, congestion breakout, previous triangle breakout. You get in, and you got where you gotta stay until previous high. I don't know what's gonna happen. I know it looks good to go up right now. Okay. Time of the day is not good for me to get in here. However it got there, I don't care. I don't need to sit down and look all the time when I trade like this. Leave it alone. Look how choppy it looked like. It's not gonna do anything here. That's why I didn't get in today. It's not gonna do anything. Had I made it, sit down properly and did all the lines on my 1-hour chart, all the lines, I didn't even go to the daily pivots, would have given me even something. Yeah, daily pivots would have added this daily M2, then it would have exactly, and didn't come back to daily pivot, but that was good enough. It's an added support and take profit R1 for now. Should I leave it till this? That would have been a question for me. But getting in here and making about 70 pips, the 60 pips a day. How bad is that? How good or bad would that be? Kya bura hai? Okay, let me wrap it up. Come back with more more ways, get better. Gotta get what I need. Third way.